Investing doesn't have to be confusing or complex. It can actually be really simple. We're going to show you a step-by-step guide on how to invest in the stock market in this video. Hey guys, welcome back to The College Investor, the place for investing and personal finance for millennials. Today we are talking about the stock market and how to get started with investing. But before you do, there are a couple of key things that you should be checking off of your financial checklist before you start investing. First, you'll want to make sure that you have discretionary income built up to actually invest with. So discretionary income basically means any of the money left over after you've paid for all of your basic living expenses, all of your mandatory bills. If all of that has been paid up and you have money left over, then that money can be used for investing. Next, you'll want to make sure that you have paid off all of your credit card debt, you have a starter emergency fund, and you need to determine whether or not you need cash for an upcoming expense. You definitely want to make sure that any short-term necessities or things that you're planning for in the short term are met with liquid cash, because once you invest that money, sometimes it can take a couple of days, or if you're investing in a retirement account, that money is pretty much untouchable without a penalty if you were to withdraw it early. So you want to make sure that you are covering all of these things prior to investing. The stock market is a great place to build wealth over time. It's not a place to get rich quickly. So if you're expecting to make money overnight, or you're expecting to pick the next Google stock, it's very, very rare that that will happen. But the stock market is a great place to build wealth, and it's important that you continue to build that, and knowing what types of accounts that you are going to put your money into in order to build that wealth. So there are a couple of major investment accounts, and the way that I see it in my mind are the accounts that are used for retirement and then the accounts that are used for non-retirement. So first, the retirement accounts. You're probably going to see an employer-sponsored plan that is tied to your retirement. So that includes a 401k, a 403b, or the government TSP, which is a thrift savings plan. All three of those retirement accounts operate very much in the same way. Next, you have your Roth IRA. The IRA stands for Individual Retirement Account. And basically what the Roth does is you will pay taxes going into that account. When you put money into that account, you will pay taxes. When you withdraw money from that account, you won't pay taxes. Next is the traditional IRA, which operates completely opposite of the Roth IRA. So you do not pay taxes when you put money into the account. You will pay taxes when you withdraw that money out of the account. Then there are other retirement accounts such as the individual 401k, the SEP IRA, or the simple IRA. Those who are self-employed or running their own business will probably want to look into these accounts. Then on the other side of retirement accounts are your brokerage accounts. So if you don't want to have the money locked up and you don't want to wait until retirement, the brokerage account is where you want to end up in. So that includes your standard brokerage account or robo-advisors. Robo-advisors are going to do the heavy lifting for you. So you're going to contribute money onto that platform. You can tell them what kind of growth strategy you want, aggressive versus conservative, and then they're going to pick the funds for you. A standard brokerage account is going to allow you more flexibility. You can pick the individual stocks or the funds. Me personally, I have both. I have the retirement account and the brokerage account because I like to have money for the future, and I like to have money for the short term. Okay, once you get your account opened, whether it be an employer-sponsored plan and you checked with HR, or you opened up your own individual account using a brokerage company or financial firm, then it's time to pick your stocks. So there are thousands upon thousands of individual stocks to choose from. And then there are funds that take single stocks from a whole bunch of companies, lump it into one fund, and there are a ton of variations of mutual funds out there. So it can be hard to know what to pick. So a common recommendation for first-time investors is to go for index funds. So an index fund tracks the performance of an index over time. The S&P 500 is an index. The Dow Jones Industrial Average is an index. NASDAQ is an index. So you're going to see those funds perform very similar to that index. In fact, I wanted to give you an example of what this looks like. So let's take a look at the Vanguard S&P 500 Index Fund and see what it looks like compared to how the S&P 500 has performed within the past 10 years. All right, so you can see over the past 10 years, the growth of $10,000, how it's just gradually increased over time. Even with a downward decrease in the stock market, we're still seeing an upward trend over time. Now, if we check the S&P 500 since 2010, it's the same thing. You can see how it's just gone up over time, even with this dip that we're experiencing. It still has historically gone up over the past 10 years. So if we put these side by side, you can see they are very, very similar in performance. So if you want to know how the S&P index funds perform, just take a look at the actual S&P 500 index, and you're going to get a good idea of how that fund is going to perform over its life. If you want to pick individual stocks, you certainly can. I highly recommend that you do your research and look at companies that maybe you understand the industry, you work in the industry, or you buy their products and services. But done is better than perfect. Ideally, you want to start your investing right away and continue to do so over time. The best way to maintain that is to automate your investing contributions. So you can simply set that up with your brokerage account, or you can make sure that you are making those 401k, 403b contributions through your payroll and your HR department. And even if it's just $20 a month, $20 a week, that's still something that you're putting towards your long-term investing goals. Now, for more information on investing, all of the tips and tricks, be sure to visit thecollegeinvestor.com.